Well, here it is, report day. We have the report numbers out. We have the export sales numbers out. We have the blizzard moving into the northern plains. We have all kinds of stuff going on. China's in town, at least in the U.S. anyway, talking about trade. We have just a whole bunch of stuff to talk about today. In case you missed it, the trade was caught off guard with the new corn production estimates that came out a little bit ago. Also, the yield higher than expected. So they came out with a corn yield of 168.4 bushels per acre, and that's higher than expected by almost 2 bushels. And that translates into a production of 13.779 billion bushels. Soybean yield a little under expectations, but within the range, I believe. 46.9 bushels per acre is what USDA says we should expect. And that would translate into production of 3.55 billion. Now, I will caution you, this was using data before this new winter storm was expected to come slamming into the northern U.S., which it's doing right now. Could cause some crop losses, maybe. We'll find out by talking to Brian Hoops. He's with Midwest Market Solutions, and he joins us right now from Springfield, Missouri. So, Brian, what about this market report that just came out from USDA, the crop production report and the supply and demand numbers? In fact, the ending stocks on corn were not friendly either as far as that goes.
Yeah, it was probably not so much that the small increase in yield in the corn occurred. You know, that was pretty minor change, but because it was so much above the average trade guess, and that is reflected in our production numbers, and of course that flows into our ending stocks. That's where it turns into more of a bearish scenario. Corn ending stocks at 1.929 billion bushels. It is down from last month, but the USDA cut ethanol usage of corn by 50 million bushels, and so we just didn't get that positive ending stocks number the trade was looking for. And, the one thing that is possibly friendly for the corn market is smaller yields and smaller production. And because we didn't see that today, the trade, I think, is going to be very cautious because we have a slow demand trends. The USDA is lowering ethanol usage. And if you look at our export numbers that came out this morning, this is the slowest export pace for this marketing year in 32 years. So we certainly don't have much in the way of export demand at this point in time. And that's what I think is weighing on this corn market so far.
Okay, looking at the corn futures, let's go ahead and do that right now. And on the December contract, it is currently trading 13 cents lower at 381 and a quarter. Now, it had a low of 379 and a half. So how much downward potential do we have in this corn market right now?
That's $1 million question. What everybody's calling and asking about is how low can this thing go? We have a lot of support, about 377 on the December corn. And, what we've seen internally in this market is the carry in the market is starting to be removed. We are seeing that carry translate into, instead of 30-cent normal carry from July or from Dece to July, we're seeing that maybe 18, 19 cents. And that is friendly overall for the market. Basis levels improving. That's another friendly sign for the market. So, watch some of those things like the spreads and the carry and the basis levels. That'll give you a clue if we're going to try and move higher. But 377 should be a point where this market finds really good buying interest once again from the trade that may not believe these production numbers, given the fact these are as of October 1, and conditions are probably deteriorating with all the snow and rain that's moving through the Midwest and Upper Plains.
Now, on the other hand, you look at our soybean market right now, and on soybeans, let's go to November. We are currently trading 7 and a quarter higher at 931. And we have the January up 7 at 945. Now, these are 2 or 3 cents off of our high of the day. And then on the wheat markets, well, we've had quite a bit of pressure in the wheat after the report came out. The ending stocks were higher than expected on the wheat as well. Taking a look at Chicago, December down 10 and a quarter at 490, and Kansas City is also feeling the heat. It is down 10 and a half cents at 402 and 3/4. Meanwhile, Minneapolis, December down 7 and a quarter today on that December contract. So a lot of pressure there. And we'll keep an eye on that one also as we move forward. Brian, we'll come back here in a minute and we'll take a look at this livestock trade here on a Thursday. Brian Hoops is our guest. We'll be right back. I wanted to remind you that we also had USDA numbers for cotton production and ending stocks. Let's take a look at what they had for that information. And for beginning stocks, we had 4.85 million bales. That was the same as the last estimate. Now for yield, they're looking at 833 pounds per acre. That compares to 839 pounds in the previous report. Production now pegged at 21.71 million bales, exports at 16.5. That would be unchanged. They did lower the ending stocks down to 7 million running bales. All right, back to Brian Hoops. He is with Midwest Market Solutions in Springfield, Missouri. Let's take a look, Brian, at our livestock markets here and get everybody updated on our current futures. We begin on the live cattle trade, and we had actual net export sales reductions last week. Everybody thought it'd be putting all kinds of pressure on the markets. Well, it's putting on some, but not that much. December live cattle down 22 at 110.95. If you look at the feeder cattle market today, currently you have November down 32 at 143.93, but the deferreds are actually higher. Looking at the lean hog trade with the Chinese trade delegation in the U.S., starting those talks today and then going through tomorrow, well, it's mixed. Even with that massive purchase by China over the last week, we have the December contract down 65 at 68.83 after posting an early high of 70.25. We do have February and April a little bit higher there. On the cattle trade, do you consider that as a small victory that they are able to survive that bearish export number this morning and not have steeper losses?
Yeah, marketing near low and exactly opposite of what we need. We have plenty of supply. We just need to see that demand and work through that supply that we have, and we have to do that with our export markets. So, the market is really focused, I think, on where this cash trade is going to be. Right now, the cash looks to be, in that steady type range, despite larger show list numbers, despite the weak export business. Futures market really holding in there very well. Of course, we've got much lower corn prices. That's supporting some of those deferred feeder cattle contracts as well.
All right, and I just wanted to point out the beef cutout values at midday were higher, so that offered a little bit of a layer of support as well. Thanks, Brian, for talking with us. Appreciate it, sir. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. So lots of counterintuitive trade going on in the markets today.
That's a good way to put it. All right, thank you, Marlon.